Now this is the Nasdaq. This is the episode number 3 on our trading log series, and we're going to be covering the Nasdaq for that. Okay, so if this is your first time coming across this channel, please do well to subscribe, turn on the notification bell, share with friends, and so that you don't miss out with our new content. Okay, so now for the Nasdaq, that's that when we had those move. Okay, I was trying to trade and at the same time trying to create the slide for this video. Okay, so but I couldn't cover it all through. But Nasdaq, I was bullish on Nasdaq and I was aiming for this fair value gap premium high level. Okay, so we have fair value gap discount low and the premium high from the daily time frame. Okay, so you can check this out from your daily time frame. So and you can see at the time of taking the screenshots, this was where we this was where price was when I took the screenshot on the hourly time frame, right? I already got an entry below, and so I was trying to, I cleaned up. I had to clean the chart up and take these screenshots, but I was missing out in price, so I had to come back and trade first before taking the rest of the screenshot. Okay, so this was obviously after the move had played out. Okay, so just like we did with Euro USD, pause the video and do your own annotations. Okay, now we all know that with Nasdaq or in this trading, the time of day is actually different. Okay, sometimes we consider the 8:30, some consider the 9. So we're going to be using the 9:30 time zone, applying the daily time, applying the what's it called, power of 3 for bullish days. Okay, so it's the same logic, right? We are looking at the open, the low, and the high. So but at this point we are not going to be using the 12 a.m. we are going to be using the New York what's it called, 9:30 opening price. Okay, so that's what you can see here. Draw that out in time, right? So we are looking for higher prices. I was eventually aiming for that fair value gap premium high, right? So now price opened straight down first, went down below an old low to gather to to reach for sell side liquidity. So we dipped into that and price moved away, right? So and eventually moved to that premium high. So now price got into that premium high, and this is the London close, right? So eventually the London close tends to forms the high of the day. Okay, so while the London Q zone forms the low of the day, and the London close, sorry, tends to form the high of the day. Okay, in terms of looking at in terms of the time range between when you are trading between 9 to to 2 p.m. Okay, so the London day tends to form your high, your intraday high of day. Okay, it could literally go higher than that, but most of the time they have the day forms within the London close Q zone, sorry. So we hit that premium high, moved away, came back to the consequent encouragement areas. Okay, so price came back to the consequent encouragement, hits the midpoint of this range. Okay, so we hit the midpoint. This is the consequent encouragement, traded into a 5-minute rejection block right here. Okay, another entry to go long, right? Came back 5-minute fair value gap, and we can aim for that. Okay, because if you project this from this high to this low, this is premium. Okay, so you buy, the idea is buy at discount, sell at premium, right? So let's break it down further to the 1 minute time on the 1 minute time frame, right? So this is the opening price. Okay, so when price open up 9:30, okay, 9:30, traded down first, went below an old low, attacking the sell side liquidity, moved away. Okay, I can't really zoom in right now, but you can just check this out on the 1 minute time frame. Okay, so price, although there was not a shift in market structure, but there was displacement, which means price wants to move away, right? Shows the willingness of wanting to go higher. Came back, first entry, 1 minute fair value gap entry, moved away, came back, optimal trend entry from this low to this high, order block, re-entry, moves away, and this two entry, notice it was below the 9:30 opening price, right? So this is a high probability entry, high probability low risk entry, or rather setup. Okay, or setup rather. So we got a first entry, second entry, and a third entry, and you can see price move away speedily to our target, right? Then this fair value gap, this is a premium array, right? So price reach for premium, you should seek for discount, right? So what's the closest discount in terms of the range, sorry, in terms of this range, looking at this range between this low to this high? So it has to retrace back to the midpoint, which is consequent encouragement level, which is what you can see here. So price reached from discount, it moved to premium, back to discount, and back to premium. Okay, so that is just what happened here. So we came back, another entry right there, hit the midpoint. So notice how we trade through the consequent encouragement level and came back down into it, closed above it, although we didn't, the body did close below it, but closed above. So this is classic resistance broken turn support right there. So we then price moved away significantly, hit the premium high resistance level, came back to find supports at the consequent encouragement area. So this is how we trade our classic support and resistance. This is how the logic we use behind it, right? So price did a fat trade into it, so price reached from premium, came back to discount, another opportunity to enter. Okay, you can see as price started to move to discount, you can short right there. Okay, price consolidated a bit, let's go up, price consolidated a bit, drop down, came in right there, institutional order flow entry trade, moved away, came back, institutional entry order flow trade, came back, institutional order flow entry trade, and sold off to that consequence. So this was my second target, right? Then we had price moved away from it, then created a fair value gap on the 5 minute. Price dropped down, had a shift in market structure, came back, another entry, but this was little way late out of the kill zone. Okay, so but it is still a high probability setup entry. Why? Because it is below the the 930 opening price, so it's still respecting the power of 3 logic. Okay, so right there, aim for that premium, and it was delivered right there. Okay, so the first setup gave us a 4-to-1 risk reward ratio, the second setup gave us a 5-to-1 risk reward ratio, and the third setup gave us I think it should be 3-to-1 risk reward ratio also. Okay, so you can see the number of setup setup that we were able to cash in a single day. Okay, so this is how you frame your bread, this is how you hunt for your bread and butter setups. Okay, so I just basically covered for forex and indies. Okay, so for the indies we use the 930 to frame our trade, then for forex we start from the 12 a.m. opening price. Okay, so that will be all for today, and that is just all I did today, and I'll see you guys tomorrow, hopefully. Okay, so do have a great night and enjoy your evening. Okay.